Morning, welcome to Market Mashup, our weekly recap of financial markets and what we have in store for this coming week that might impact stocks and bonds. I'm Scott Nasca, President of Generation Capital Management. Good week for equity markets last week as the Dow Jones was up 1.75%. S&P 500 was up 1.9%, and NASDAQ was up 2.6%. So it was a good rebound from a tough February where we saw markets drop and take back a lot of the January gain. One of the things I do want to point out, as usual with the bonds, take a look at the 2-year and the 10-year. The 2-year yield currently is at 4.83%, and the 10-year is at 3.9%. So we have roughly about a 93 basis points difference between the 2-year and the 10-year, which is when the 2-year is higher in terms of yields, we have an inverting yield curve. Which is a downward sloping curve. And that usually, like I said, leads to economic slowdowns and recessions. So keep an eye out for it. The bond market's basically, not liking what potentially could be happening in the economy. And, you're seeing it in the yield side. Don't forget the Federal Reserve really has more of a significant impact on the shorter maturities for the on the yield curve as they control interest rate policy through their Fed funds rates. And on the longer end, when you're looking out 7, 10, 20, 30 years, it tends to be more economic sensitive. So the economy has more of an impact in terms of those levels. So we are seeing, pretty wide divergence between the 2-year and the 10-year, which, like I said, is if history repeats itself, is not good for economic market or economic data, as well as financial markets, seeing a slowdown potentially taking place later on this year. We have a fair amount of information coming out, data coming out this week. We have the JOLTS job data, which will be out on Wednesday. We have the Fed Beige Book, which is also going to be released on Wednesday. And then on Friday, we have the jobs report for the month of February. We want to pay attention to the actual number of jobs being created, as well as the average weekly hourly earnings, see the growth there to see if you're still seeing some inflation on the wage side work its way through. Last month was a big number, which over 500,000 new jobs, which caught a lot of people by surprise. So, we're going to see if you're going to see any type of retracement in the month of February or revisions for December and January numbers. It's something we want to take a look at. We also have Fed Chair Powell speaking on Tuesday and Wednesday this week. Pay attention to that in the Q&A format. See if he provides any other changes. A lot has happened since the last time he spoke, with revisions in inflation numbers through CPI and PCE numbers that came in a little bit higher than expectations. And what he was alluding to in his last formal discussion and comment. So you want to see if anything has changed there. And we're also going through the last week of Q4 earnings for companies. So we're at the tail end of that taking place. Then we'll look obviously in the next month or two to that starting out again. So a lot of information coming out this week. Please pay attention to both stocks and bond markets. A lot can happen in the month of March. It tends to be a little volatile, so we want to pay attention to that. If you have any questions, please feel free to take a look at our website, www.gencapmgmt.com. Give us a call. Our team's ready to answer any questions you might have. Happy to give a second opinion to your portfolio if you're just not sure exactly, how you're structured, if it really meets your goals and objectives. We're happy to take a look at it and provide our comments as well. So feel free to reach out to us. Be glad to help out any way we can. I'm Scott Nasca, President of Generation Capital Management, and this is Market Mashup. Have a great week, everyone.